John Ken, it looks like, thank you for the offer. I think we'll be good on Zoom today, unless somebody else needs it, but it's good to know. So we just got done with a nice treasury management discussion. If you guys ever have extra time and want some context or added depth about what we're talking about in these tokenomics discussions at 4 Mountain Time, jump into the Tokenomics audio channel at 3:30 to hear the deliberations of your intrepid Treasury Management and Diversification Committee, where we talk about a lot of these related issues. Just wanted to start this off by saying occasionally I see some new virtual faces and avatars in the chat for these discussions. If you are kind of newer to the ShapeShift space and the DAO, and you're kind of just exploring it, welcome. And this is, in my humble opinion, one of the coolest things that's happening in crypto right now, right here. ShapeShift has, for a long time, stood for self-custody and the empowerment of the individual using crypto. We're doing really cool things with cross-chain interactions and making it easy to interact with crypto, and all in a decentralized DAO paradigm. So if you're new here, introduce yourself, hang out. You can self-select using our role selector channel what you're interested in exploring. We don't want to overwhelm you right off the bat, but we're doing some cool shit here. So if you're here for the first time, thank you for joining. So we have some ground to cover. I wanted to kick things right off, though, with some updates from Willie on two things we talked about last week, namely the success token and the Angel Vault. The success token directly relates to also one of our main initiatives, which is to diversify into stablecoins in the tokenomics work stream. But yeah, Willie can kind of just, if you're available, Willie, speak to the latest and greatest on those two fronts.
Thanks, Kent. What's up, everybody? So yeah, the success token, we're having some good progress there. We have updated all of the numbers with the UMA team. I'll go ahead and post a link in stage chat if anyone wants to check out this one pager we've put together. And we've already, as mentioned before, we had some initial interest from the first investor we talked to about this. They're interested in 200 to 300K. And so because we have some interest, we really want to push this forward and try and close the round. The goal is to raise at least $2 million of stablecoins for the DAO's treasury. And with the current, at a $1 Fox price, this would be about 4 million Fox required to collateralize it. At a 50 cents Fox price, this is about 8 million Fox required to collateralize the $2 million worth of success tokens. So we've also got a bunch of calls with investors lined up this week. Also, this past weekend, a couple of the UMA protocol team members that are accredited investors reached out and said that they'd be interested in 25K allotments of the success token. So and we had another really good call with a potential investor group earlier today, and I have another one after this tokenomics call this evening. So it's going really well, and I'm now just in the mode of trying to talk to as many investors about this as possible. And so far, the calls have just been going great. So I'm pretty optimistic that we'll be able to fill this round out with ease pretty quickly, potentially as soon as before the end of the year, which would mean closing as soon as December 28th. But the cool thing about these success tokens is we can mint them just using Fox and UMA's smart contracts. And then even if one of the investor groups is busy over the final few days of the year, we could do the actual token swap, shortly after the 28th. So anyways, one of the remaining questions is, we could either just go forward with this right now for a proposal. We could start a governance proposal saying, assuming we get the investor interest, approval to use X million Fox, it'd be like 4 to 8 million Fox to collateralize and mint these success tokens. Or if the TMD committee wants to lead this, I want to give you guys first dibs to spearhead this.
Thanks, Willie. So yeah, this is touching on an interesting point that we were discussing in the Treasury Committee chat. Is it's within the scope of the TMDC to approve this. We're allotted up to 60 million Fox. in my mind, it's like, this is also, it's kind of a substantial amount, but I'm thinking, whatever can speed this along the best way, whatever gives the most lead time and just puts us in the best position to get this onto the market ASAP. UMA is a well-known project. They're well vetted and audited. I personally have no compunctions about pursuing this. So it could be something like the Treasury pre-approves 8 million, which would be sufficient unless hopefully we don't go below 50 cents. Then that doesn't add up to the full 2 million. But this is one of those things where it could go either way in terms of governance versus TMDC. My general sort of thought, and this kind of zooms out to like broader governance things, but anything that maybe the committee can do to just take the mental lift off of like just governance stuff, kind of seems like a win. That way, governance can be applied to, voting can be applied to other issues, maybe bigger issues. For example, the Tokenomics sort of thing, which is putting possibly more Fox at risk. But those are my general thoughts about it.
Awesome. So you think this would be something that the Treasury Management and Diversification Committee could potentially, you guys don't have to decide today, but I think if you guys could make a decision on it's really up to you if you want this to come from your allowance or if you prefer for it to be a separate governance proposal.
Yeah, I think we could expedite this week. Yeah, for sure.
Fantastic. And yeah, any other questions about the success token in general? I kind of skipped the explanation because we've covered it a few times, and there's good details in the document there. But if anyone has any questions about the success token, feel free to throw them in the chat. We can discuss. But yeah, and should we move on to the angel vaults?
Yes, please.
Sweet. So here, and let's see, do we have anyone from the HE team in the audience? Looks like not. I know they're very busy talking to a lot of projects who are interested in these angel vaults, and I'm very keen on these too. And Brian actually put his proposal into ideation today, and there's a little bit more clarity on how the initial liquidity, on how he's proposing we get the initial liquidity into the angel vault. So, as a reminder, the angel vault is basically a vault that Ichi has designed that will manage two Uniswap v3 positions. For us, it would be one position of one Fox and another position of Fox on a one Fox Uni v3 pool. 90% of the liquidity would be on the one Fox side as basically buy orders for Fox, and then 10% on average of the liquidity would be on the Fox side as sell orders. And this is so basically compared to the current Fox and ETH liquidity pool we have, it's a lot more. It's actually the liquidity is weighted on the buy side, whereas it's equally weighted 50-50 Fox ETH on the Fox ETH pool. And the point of this is it's a pretty brilliant design, and it's been working really well. You can see how it's been working recently for Ichi token. So they right now have a $2 million vault about with 1 Uni and Ichi tokens. And you can see that in the recent downturns where the price of ETH has dropped pretty substantially over the past few weeks, the price of Ichi has held better than any other token that is, correlated with ETH. And they're pretty confident they can bring the same results to any other project. And yeah, because we have a one Fox token, we're one of the first projects that has this available to them. So really excited about this angel vault. And the big update is in this latest ideation proposal, Brian is proposing that the ShapeShiftDAO basically mints $2 million of one Fox itself. And the method of minting is left somewhat open-ended. And part of that is because we have this, it's possible that we'll have $2 million of stablecoins from the success token sale pretty soon. But basically the method of minting is left up to the TM&D committee. So that basically, however the TM&D committee wants to acquire that $2 million of stablecoins, that would be their decision. But it says in here, basically, like any means are on the table as long as they don't result in Fox sell pressure. Then it also includes a farming program. So this is exciting for Fox and stablecoin token holders. This would be an Angel Vault farming program targeting $8 million of additional liquidity. So they'd be targeting a total of $10 million of initial liquidity in this vault, which is what Ichi recommends based on the current amount of the current Fox circulating supply. And they've also seen, Ichi has seen about 35% APR just from trading fees on their vault. So it's a really good, healthy APR from the trading fees alone. But in this proposal, it's proposing that we target at least 50% APR for this program, including the trading fees. So to be conservative, it's proposing a reward rate of 25% be targeted. And at current Fox price of about 65 cents, that would translate to $1 million of Fox rewards, or 1.5 million Fox about over a 6-month period. So a relatively cheap liquidity mining program versus our current or in our past farming program. But these proposals would ultimately result in $10 million of initial liquidity in this Angel Vault, which has been the recommendation from Ichi.
Great summary, Willie. So you raise a few interesting points here. One is that we would need 2 million, at least under this proposal, to create the one Fox, 2 million of a stable coin. So interestingly, so just to be very transparent, I've been super excited about this success token because I think it's cool, but also we don't have any meaningful exposure to stables right now for hedging purposes. So that really excites me, having just 2 million within a few weeks. This, of course, would be a different type of use case, taking that 2 million and then using it for the purposes of the Angel Vault, which has its own merits, and it's instead of using it to hedge, we're using it for these other purposes, and it sounds like definitely a compelling thing. But this kind of gets into the broader discussion about how else can we achieve diversification. That's actually next on my agenda here. It's sort of just thinking about the big picture. One question, let's say, I guess in your opinion, and maybe this would be a better question I should ask of the Ichi team, but could we achieve a lot of these benefits with namely just sort of like, especially with kind of the buy side protection, with just maybe $1 million worth rather than 2?
It's a great question, and I think the way that they're doing this calculation to recommend 10 million is based on the circulating supply. So you have to imagine like a worst case scenario where X% of the circulating supply were to get dumped, based on the existing liquidity, both in the Angel Vault as well as all the other liquidity pools that we have. What is the risk that all of that one Fox liquidity would get basically eaten up? And that's what we want to mitigate, because obviously if we put $1 of liquidity in this Angel Vault, it's just going to get wiped away really quickly. So based on what the calculations that they've done, and I think that they'd be more than happy to share, the math that they did behind this, that's how they arrived on the $10 million recommendation. Based on that, they're pretty confident that that there just would not be enough sell pressure possible from the circulating supply to actually like eat up all of the one Fox liquidity on the buy side.
Good to know. Thanks. Yeah, I'm excited to go back and review kind of what their reasoning. John, you mentioned you've posted some thoughts about this in the forum, and just curious, really quick, to get your insights around that.
Yeah, so I've been coming up to speed on this since this was talked about last week, and reading through Brian's earlier post, and I am definitely getting bullish on this concept of the Angel Vault and the benefits this can bring. I think the real thing to decide is not should we deploy an Ichi Vault, and I wrote this in the thread because I think that's probably not super controversial. It's just how do we get that liquidity in there, and how do we fund that to start? So I did make a post before this meeting where I recommended. So Brian basically posted 4 different ways that might happen, and I basically recommended that I think there's a great way to get basically this off to start. So I basically am recommending, but I'm certainly up to hear other ideas, that if we're going to do this, one way we can do this is to have, if I understand correctly, and Mr. Nerdhair helped me understand this in the other thread, is we could basically deposit, the Treasury could approve some amount of deposit. I don't know how much it is, but 2, 3, 5 million Fox, some larger amount of Fox, but not crazy, to put that into the Ichi Treasury Vault that we already have, our 1 Fox Vault, and then use that to basically just mint more 1 Fox. So we could basically lock up some additional Fox, mint more 1 Fox, and then use that initial 1 Fox, call it like 1 or 2 mil Fox, to seed the initial pool. I think that would be a really great way to get the pool started. and give it some sufficient, maybe not totally what we're looking for, but some sizable amount of liquidity to start. And then we do some sort of small liquidity mining program, kind of like what Willie talked about, to basically incentivize the rest of the liquidity into the pool. And then long term, if this is working really well, the TMDC could consider this as another possible candidate for like a Olympus bond, for example, because every bond you buy is like 90% stablecoin. So that's another interesting path, but I think that should come later. But basically, that was my thought, is you basically go with that kind of seed phase by putting some more Fox in the one Fox vault, minting more one Fox, and then a small liquidity mining program along the lines that Willie described.
So, John, are you saying just adding sufficient Fox to or Treasury Fox to the vault would obviate the need to fund it with stables?
That's my understanding, is that we don't actually need to deposit stables. We could basically just deposit Fox to the vault and use the USDC that's already in the vault to mint more one Fox.
Yeah, as long as we maintain at least 150% collateralization ratio. And that collateralization ratio is just based on the amount of one Fox that is not already backed by USDC. So right now it's like all the one Fox that's out there is backed by 80% USDC. Then there's like 300% or something Fox backing that 20% of one Fox that's not backed by USDC. So I think there is, I do think that I think we're somewhat limited by the amount of, by how much we could get from that, but I do think it would be a good way to seed the liquidity. I do still think we'd need maybe some additional liquidity from the Treasury, but I think that it's a good move. It could be a good move for the Treasury. So we're about to, if we have these $2 million of stable coins, then it's great to put those stable coins to work to generate yield, while also, if we can do that in a way that supports the value of Fox, which is going to have the most impact on the Treasury's value, then I think that's a great win-win. And the APR, just from the trading fees alone, again, is going to be like 35%. So it's really healthy APR. Plus, if we get these $2 million of stable coins from the success token, we actually only need 1.6 million of USDC to mint $2 million of one Fox, because we can also just use Fox from the Treasury. So I do think a combination of that, plus I'm in support of also minting some additional one Fox just from the one Fox Treasury. But I do think it'd be a good move for these stable coins that we're about to get. I think it's a great place to park them to also generate yield. We'll still have 500K or so of stable coins if we were to do that, and then the other stable coins would generate good yield and then also really support this Angel Vault and Fox ecosystem.
Yeah, so this kind of relates to a discussion we were having in the Treasury Committee chat about how there's sort of two buckets of stables that ShapeShift will soon be holding. One is stables that we hold for a rainy day. This is the hedging stables that we're not really exposing to any sort of risk. And then there's stables that they're part of our balance sheet, but they're also being employed in ways to pursue these sexy double-digit APRs and other, and they kind of fall into that growth bucket. So this would definitely be the latter, maybe combining that with more Fox could bring the amount of stables we need down. It's also interesting that 1.6 would actually be what's necessary. The difference comes out to 400K worth, 400 USD worth, which is precisely what we wound up borrowing from our Rari vault to fund December payroll and the initial ETH Denver sponsorship expense. So I just thought that was kind of, you could see a kind of a similar scenario where maybe the difference makes up, or the difference provides what we need for January potentially.
Totally. And especially with like the index co-op opportunity and stuff coming up, there could be opportunity to get some stables in there, and the other Olympus Pro opportunity. And one other thing I really wanted to mention, I was chatting with Brian earlier from Ichi, and he initially was also the biggest fan of doing like an Olympus Pro style program for one Fox. And I was a big fan of that as well. But I explained to him that we were already considering doing this Olympus Pro program just for stablecoins. And he actually didn't know that you could just do an Olympus Pro program for stablecoins. And when he heard that, he said, "Oh, you know what? That's actually better. If you guys just do that, then the DAO can just be acquiring native stablecoins. We can always take those stablecoins to mint more one Fox and deposit into the Angel Vault. But it'll save transactions for the user, because they can just go from stablecoins, which have far more liquidity than one Fox, and they won't have to like mint additional one Fox
Yeah, that's my thought too about why I don't think we should rush into the Olympus side for that, because I think the DAO is better served by just doing that for a straight like stable coin, and then like you said, Willie, we could always use that to mint more if we decide to.
Exactly.
Cool.
All right,
and
go
this
vote
is
on Brian's proposal.
Oh yeah, actually, John, would you mind sharing the link to that thread and your response in the forum?
Yeah, it was already shared by Willie in the stage chat, so it's that same.
Oh, it's right there. I'm looking right at it. Okay.
First
Thanks.
response.
Cool. Awesome. So yeah, this is all kind of a good segue into the next agenda item here, which is also relating to our diversification efforts. So Index Co-op, as a reminder, so they've approached us. They approached us a few weeks ago and said they had some potential investors lined up who were interested in purchasing Fox on an over-the-counter basis for a discount, and also with some vesting involved. Thanks, Willie. Appreciate it.
Thanks.
This would be this could really be a good fit for us, diversifying, because again, we're not flooding the market with Fox. Instead, we're perhaps streaming it to investors, or at least giving it to them on a vested basis for a nominal, manageable discount. Of course, what exactly is that discount? That's kind of the devil's in the details. But we had a great discussion with them last week, and kind of what they're looking for from us now is how much are we willing to sell at a discount? What would that discount be, and like what sort of vesting period would we prefer? So we just had a good chat about this in the Treasury Committee. The way we'll respond to them will be we're willing to sell perhaps up to 10 million of Fox via this method, knowing that we're targeting about 10 million for our rainy day fund. If you look at our current burn rate and expecting like an 18-month bear market. On top of that, it would be nice to have maybe another 10 million of stables to employ in that growth bucket for growth strategies. So basically, what we're thinking is, let's reach back out to them. The team again seems to really understand what we're doing. Interestingly, I believe it was a day after we talked to them last week, they announced a seed round with participation. Sound like George Bush from Sequoia. They're a very well-known VC, so they have some good backing. And they would be able to potentially connect us with some investors who, crucially, not only fit our kind of blueprint of what is a good sort of deal here, not only fits our parameters, but investors who really believe in the project long term and can contribute to, say, ShapeShiftDAO's network effect and really kind of be promoters of the DAO. So there's some very exciting possibilities there. So we'll be getting back to them shortly. Again, it's nothing we can really count on yet, but it's a very attractive way to raise funds. The other nice thing is, if we did raise our $10 million nest egg, then further stables could easily be allocated into things like, the Ichi or the Angel Vaults and things like that. So I'm really looking forward to pursuing that further. Also, it kind of goes without saying, but the current market conditions have been challenging. We had a treasury valued at 300 million roughly last week. Now it's at 200 million. This is crypto, and as a longer tail, smaller market cap asset, we're quite volatile and prone to directional swings. So, hopefully it goes back up to 300, but we certainly can't count on that. We need to take action ASAP to be diversifying. Another interesting avenue is that we could issue an Olympus bond, and this would allow us to gradually sell Fox into the market, also at a discount. Kind of a cool similarity there with Index. But this would, of course, be via Olympus. They would create a bespoke bond, kind of as John and Willie were talking about just now, where the pair could be like Fox and USDC. So this would allow us to raise, perhaps like $1 million a month on an ongoing basis, and that could be applied towards both diversification for hedging, but also then we can turn around and do interesting things with those funds, or it's just a nice revenue stream, or we could turn that into a revenue stream with other fantastic money Legos. So there's a lot happening on that front, and we'll keep you guys updated. Moving along, if nobody has any questions or thoughts about those items, let's see. We have a proposal to stake Treasury Fox in Tokenomics. This is something that I moved to ideation last night. Actually, Ron just said, I think I'm more in favor of the bonds on the Olympus side of things. Would be curious to get your thoughts about why you feel that way in the chat, Ron, or whatever you get a chance. That's interesting insight there. And another thing to keep in mind, and I don't think I can stress this enough, is none of these strategies are mutually exclusive. I think it makes sense from a risk perspective to really, and also just an economics perspective, to employ all these strategies to some extent. They all have their trade-offs. Like with index, we're getting that nice pure exposure to stable coins, and it's we're not hitting the market, but there is we have to consider how much Fox we're selling and at what discount. With Olympus, we're achieving that via other means. Success token is great because we're just selling this Fox for this wonderful option, this wrapped option thing. It's just like super far out. Like it's interesting to think like how this is like sci-fi economics. This stuff didn't really exist prior to crypto, so it's pretty cool to work on. Ron, I see you typing. I'll move on to the next point, but then we can address your point as well. On the Tokenomics side of things, so I moved a proposal to ideation last night. This entails staking Treasury Fox in Tokenomics. The benefits, I think, of this are pretty straightforward. I laid them out in the proposal, the draft proposal. Generally, there was support for that. Some people had concerns about the kind of the risk involved. In my opinion, the risk is manageable. The project has been live for several months and it has been audited, but of course there is risk there. The key variable we need to decide on is what percentage, or I should say, how many Fox do we really want to put into, or stake into our Tokenomics reactor? Initially, in the draft proposal, I cast this as their variables were like basically 20, 25, or 30 million worth of, million Fox, not USD, but actually Fox tokens. It gets confusing because the assets price is all over the place. So in the updated proposal, I have provided you in the poll with instead 3 different percentage options: 10, 12, and 15%, which as of last night with Fox at about 65 came out to about 20, 25, and 30 million worth of Fox. So that's kind of what we're trying to get some community insight on before potentially taking this to a governance vote. But again, the risk should be highlighted here. Like, let's say we put 30 million USD worth, 15% of our Fox treasury. It is not out of the question that could be nuked. John says stake all the Fox. We're actually going to just take the entire treasury. We'll just throw it right in there. YOLO. But in the worst case scenario, one thing to keep in mind is that the DAO itself is getting, much like individual Foxes or former Foxes, there's a Sablier stream that the DAO is tapped into, and it's getting 250,000 Fox roughly per day. So in the event that somehow that Fox went up in smoke, that would be replenished eventually by this stream. But again, this is not a scenario we want to deal with. So it's important to consider those risks. Yeah, I'll pause there, to take a drink of water, but also if anybody wants to chime in terms of what we talked about so far. Gotta love those awkward silences. All right. So Ron was, he has responded regarding Olympus, mentioned that he prefers Olympus because we have an established relationship with Olympus in place. The bonds in Fox will more likely go to the hands of smaller investors versus the big guns. The likelihood of a single bond purchaser being able to influence the market on a large scale is less likely and gets more Fox holders. So, yeah, that's a great point, and it's important to consider. But like in terms of like getting Fox nicely distributed is important from I think just a general participation standpoint, and also from a governance perspective. Somebody raised a great point in the last half hour that we need to be mindful as we sell these potentially to these index investors that we're not giving away so much Fox or selling so much Fox that it would raise the likelihood of a governance type attack or takeover. I think we can approach that index arrangement in a way that lessens those chances. And also Danielle raised a great point in that discussion where the vesting, which what we'd be looking for is like 18 to 36 months of a vesting period. That makes it a lot more difficult to execute a governance style attack, especially if they're getting their funds streamed via Sablier. But yeah, that's a great point, Ron. Also, I think there's something to be said for having that established relationship. John and I were able to jump into the Olympus DAO Discord, and they quickly, we know these guys already. They were quickly able to, answer some questions we had about the bond, a potential like bond we'd be selling. So that existing relationship goes a long way for sure. So yeah, awesome point. What is MIFE? M-I-F-E. Oh, make it fucking easy. Yes, amen. That was our mantra at ShapeShift for quite a while. Maybe it still is. I love it. Make it fucking easy. So yeah, in terms of the proposal, take a look at the ideation proposal. It's in the proposal section of the forum. Comment if you are interested. Assuming that it clears the ideation phase, you can expect to have that moved into the governance phase in 4 to 5 days. And yeah, moving on to the next thing, we have the dashboard. So, ShapeShift is about to get a lot more active and complex with its positioning in the DeFi space. In terms of just not just our balance sheet, but where we have exposure, where we've collateralized positions. Great example is our Rari pool. We have I believe it's 2.5 million Fox in that Rari pool, and we need to be very mindful of if Fox were to drop more, at what point do we need to be putting more collateral in? And we're keeping an eye on that, but this will get a lot more challenging, or at least busier, as we add more positions throughout the space. So we need a dashboard, a DAO dashboard, where we can sort of just keep an eye on where things are. Like the nightmare scenario for me is like there's some sort of black swan clusterfuck sell-off, and it turns out that we're caught off guard, and $5 million worth of Fox goes up in smoke because we weren't prepared. That would I can't stand the thought of that, and we need a way to really mitigate that threat. that would just be an unforced error and completely amateur hour. We can't do that. So the good news is we have several contributors here in the DAO who are interested in building that dashboard. We're trying to line up a meeting time to get everybody involved. There's been some good thought already around this sort of thing. LPX let me know this week that there's actually an existing sort of dashboard that was built out, I believe, as part of the global outreach efforts, or that work stream. So there's some kind of work we can build on already. But the other great thing, other than just helping us really keep an eye on these and knowing when to collateralize and helping us maintain and manage the positions, is just from a transparency perspective. Anybody should be able to see where our finances stand. To a large extent, they can just go to our EtherScan contract and look at our balance sheet in terms of our ERC20s. But ideally, people can also see, well, okay, how much has ShapeShift borrowed and from where, and what's the big picture? If we can be maximally transparent, that would give us a really big, it would help differentiate ourselves from other DAOs, and also just really, I think, be a big win in terms of getting more people involved, because it's like, okay, these guys are really above board and clear about what they're doing. Let's see here. So ideally, I'd like to have that up and running, within, it gets tricky with the holidays coming up here, but if we can get a kickoff meeting around that before the holidays, that would be nice. One other thing worth stressing here is, remember, tokenomics is a funded work stream. So, I get up here and run my trap for an hour or whatever, and that's cool, and we talk about this stuff, but this is a funded work stream with the ability to fund contributors. So if you can bring something to the table with respect to things we need, like helping manage our positions, or building out a dashboard and things like that, these can be bounties or paid efforts. It's important to incentivize these sort of things, and it's just worth mentioning that because up until a few weeks ago, it was not a funded work stream. So this is another thing we talked about during the TMDC, and I think it's worth reiterating. If I could just get John back up here and speak to this again. But John had a great idea for utilizing the LP tokens from our bond contract. I believe that was from our Olympus Pro bond. This is really cool, guys, because this is some of the magic of having protocol-owned liquidity. It sounds like such a buzzword, but it's a huge shift, because whereas before we had to essentially pay to rent liquidity, liquidity mining is essentially a cost to the DAO. Now with protocol-owned liquidity, instead, value can accrue to the DAO. In fact, it has. We have 1.6 million of protocol-owned liquidity in our via ShapeShift Olympus bond, and John has a cool idea for how to maximize that liquidity.
Yeah, thanks, Ken. Happy to talk about it. And I think this is a relatively straightforward idea and thing we should do. So I just posted in the stage chat the Dune dashboard that one of the Olympus contributors created. So if you're looking for more info, definitely worth looking at that. But if you look at that, you'll see that, as of today, at current prices, we own about a little over 1.6 mil of the liquidity of the Fox ETH pool that the DAO Treasury itself owns. And that's a little over, right around 5% of the overall liquidity. So this is starting to get really material. And that's cool for a number of reasons. So one, you'll see in the top right of that dashboard that the DAO is already earning, a portion of the trading fees of that pool. So it's already earned over 11K. But I think even more importantly, what the DAO should do is, and this is kind of what my suggestion is the DAO should go ahead, take those LP tokens and stake them in the Fox farming contract. And what that will basically allow that LP to do is it will still earning the fees. It will still own, 5% of the liquidity. But now it will actually start to claw back some of those liquidity mining rewards. And this is ultimately what makes the Olympus owning the liquidity via the bond program cheaper over the long run, because now it doesn't need to pay out as much in liquidity mining rewards, and that can start today or tomorrow or whatever this is voted in, preferably by the TMDC, by just staking those tokens. And then obviously we're getting more of these tokens every day as the bond program continues. But I think every few weeks we should certainly stake the amount we have now, and every few weeks we should just keep claiming and staking those tokens. And as the DAO owns more and more of its own liquidity, this will be cheaper because it will claw back some of that Fox, and that Fox can be used on other initiatives. And yeah, I just think that's a far more sustainable way to do things, and I don't see any reason we shouldn't do that.
Yeah, it kind of feels like a no-brainer. We talked about this in the committee meeting, and it was a pretty non-controversial subject. It seems like just a nice way to earn money on this these LP tokens. The risks would pretty much be confined, I think, to the staking contract risk, which is obviously, this has been a pretty thoroughly vetted contract that we're already using heavily. If something goes wrong there, we're in a lot more trouble. JPNM makes a good point here. LP tokens will decrease the APY, but as the treasury tokens go back to the treasury, its price will go up. We talked about doing that maybe in a gradual way so as to not to kind of throw off existing users too much. But yeah, that's a good consideration.
Yeah, on that point, I don't think it's too big of an issue, and I actually think this is a good thing. So I don't, 1.6 mil is a decent amount, but it's still only 5% of the pool, so it's not going to have a huge impact on that APR. Certainly not as big an impact as just the price of Fox itself. So the bigger thing will be the price of Fox, and if the price of Fox, goes up as the markets go up or down, that's going to be the bigger impact on APR. But I also think it's good. We don't want that APR to be super high forever, because that attracts those mercenaries, that attracts that type of liquidity mining that is not sustainable long term. So we need to, the DAO is already on the path of weaning off of liquidity mining. It did this when it lowered the rewards for this next program. We'll have to have discussions, and this is something you're thinking about, Ken, in tokenomics, about what, if any, the next program should look like. But we'll probably have a relatively drastic reduction, is my guess. Now that we have things like Tokenomics and we have protocol and liquidity, we'll probably still want to do some liquidity mining, but it'll become less and less. So I think, that APR going down gradually over time is actually a good thing, because then when the APR does go down, when the liquidity mining is reduced, it'll be less of a kind of shock to the system. It won't be so surprising to people. If you have a big drop from 150% to 50%, that's a big shock to the system, and you could risk losing a ton of liquidity. If it goes down from 85% to 75% or 60%, that's not going to be as big a shock to the system. So I think gradual lowering of that is actually a good thing long term.
Yeah, well said. And it's hard to overstate how important that is, and how cool it is, the idea of weaning us off of that sort of DeFi 1.0 liquidity mining paradigm. I think that this sort of protocol owned value approach is so much better in so many different ways. Just the simple ability to kind of not have to rely on those low commitment type of mercenaries, not to judge their decisions. That's in a sense, that's a smart and profitable economic action to be that mercenary type. But from the DAO's perspective, it's not great. So I agree, John. We could see probably a substantial like another halving in the mining rewards over the next phase. I guess that's another item up for discussion in tokenomics. But if we can crank that out, that analysis and that decision by mid-January, that could really set us up for kind of moving further into the protocol-owned paradigm.
Yeah, that's great. That's basically my 2 cents on it, but I really think we should stake it, and there's very little downside, if any, to doing it.
Yeah, absolutely. And Fox, great point. Being able to use those safe funds to go towards everything else we've discussed today. There's no shortage of ways to use revenue, and there's a lot of things that we can do both in DeFi and maybe also we haven't even talked about this today, but the idea of like SFOX and like, okay, we have revenue streams that can go back to Fox holders via like a staked Fox contract. Yeah, total win-win. And once you get that flywheel going, then things get super cool. Everybody's having fun, and yeah, that's what we want to. That's what we want to have. So just moving on to the last item on the agenda here. So on Thursday, that's the governance meeting at 3:00 Mountain. We're going to hear from the Grow team about a proposal they submitted in the forum. I have not actually had a chance to delve into this too much. I'm really excited to hear what they have to say. But at a high level, basically, they kind of are doing tranched risk stablecoins. And, of course, we want to have stablecoin exposure. I think they're basically able to have yield from, if I'm reading this right, I might be talking out of my ass right now, but looking at their webpage, it looks like they're doing kind of a urn type thing where they're employing strategies in a way to generate yield in a managed risk sort of way. Currently, they're offering like 10% of a variable APY on their vaults, and then a smaller yield of 3.7% on I believe what's a stable coin. I may have just brutalized that description, but we'll be hearing a lot more from them and their roadmap on Thursday, and it could be quite relevant to what we're trying to do with stablecoin exposure. Plenty of shit to talk about. So that said, does anybody have any other thoughts or topics or questions?
I'd love to hear, Kent, just from you on what other things you think the tokenomics work stream might be looking at and considering, working on over the next quarter, and where you could use help, or where, kind of a call to action for contributors to come help you. Great question.
Yeah, so as I've stressed repeatedly, priority number one is really just kind of get diversification of stables. Now that those efforts are underway, we can start to think about and of course, we can do the same thing right now in terms of how to also grow the treasury and use DeFi in a way to tap into new revenue streams. I'm looking forward to focusing on that more, as opposed to just kind of the logistics of getting diversified. Another thing is, zooming out and thinking about that value accrual perspective, or that component of the work stream. This is something I outlined as one of the two critical jobs of the tokenomics work stream in my original proposal. But this is really focusing on okay, how and why does value accrue to Fox? What are the revenue streams? What are the business models? Of course, we have this really simple but powerful idea of rev sharing with partners who use the platform, and this should become more powerful as the interface is open sourced and more usable. Also, kind of going back to that SFOX sort of idea is okay, is there an elegant and really nice way for holders of Fox to be directly tapped into those revenue streams? So, in essence, it would be basically, maybe if we have extra money, we can buy Fox off the market and distribute that to SFOX holders, people who have staked Fox in the staking contract. This would be different from the current staking we have. Giant Kin says so many different things we can do. I want to do them all, and that's part of the challenge. Is what should we not do? There's so much going on. Part of it is always having an eye towards risk management and making sure we don't YOLO into things that possibly are riskier we want to be responsible stewards of the treasury. In terms of what sort of roles can people play in this? I think, in terms of like metrics and monitoring, certainly. Also, people that can help actually, if you're kind of a degen and you have experience managing positions, and also finding interesting opportunities and being able to like leverage all the incredible like 4D chess, money Lego type things that go on in DeFi. Your input and talents could really be put to good use in the work stream. That's actually something, now that the work stream is underway, is I need to kind of step back and kind of think, okay, where should we head next kind of as a work stream? Definitely open to everybody's perspective too, because this is where it gets really fun after we shore up the treasury. Also, definitely kind of weaning us off that, that wonderful crypto heroin of liquidity mining. It's so nice, but it's not really too sustainable over the long run. That'll be some fun stuff to ponder as we move into Q1. Yeah, Gray Machine, good question. What's our threshold for leaving Fox in the treasury? We do have in the committee, we have 60 million we can pull against, but that's an interesting sort of guideline. Willie, I see you back up on the stage. Any thoughts?
Hey, Ken, can you hear me okay?
Yes.
Awesome. Yeah, I just wanted to give a quick update on SFox, just so that the community knows that there is progress being made. This past week, Ocean put together a really great kind of high-level scope for the actual contracts required to launch SFox, which is awesome. And he put together kind of a high-level timeline for his estimate of how long it would take the developers to build out the contracts and the testing and the SDK and complete the audit and everything. So there's a proposal forthcoming that for the development work for SFox. And one of the cool things is that because it's primarily contract work, we think that this can be done outside of the engineering work stream's roadmap for the most part, and so that it can kind of be worked on simultaneously with our existing roadmap. So I wanted to share that update because I'm excited to let everyone know that there is good progress being made on SFox. And props to Ocean for kind of figuring out how all these contracts could actually work. Pretty excited about bringing this to market.
Awesome. Thanks for the update. Calling us from your badass personal jet going somewhere, no doubt.
Almost there. And one other thing I wanted to mention, as a potential focus for the tokenomics workstream in the first quarter, is these bridge protocols. And LPX had actually mentioned it. He was discussing it in one of the Discord channels. I can't remember which one. But there's these bridge protocols that are permissionless that enable DAOs to basically provide liquidity of their own token on different EVM networks to enable frictionless bridging of Fox between all the different EVM networks, and actually, put the Fox that's sitting idly in the treasury again to use to generate fees, to generate revenue from the fees paid by users bridging from one chain to another, while also just supporting the Fox ecosystem and enabling this frictionless bridging.
Yeah, bridges are a super interesting emerging sort of thing. It's like I'm always wary of giving firm predictions in crypto because it's always so crazy. But it seems like extremely likely that cross-chain bridges, which comprise L1 to L1, L2 to L1, and L2 to L2. So there's all sorts of variants of these, but they're going to be even more growing even faster than they are right now. Things like Hop Protocol and Connext, and just there's so many interesting arbitrage possibilities there. Also, when you have some of the cross-chain sort of thing, I know I saw you and LTX were talking about that too. So that's absolutely one of the interesting things for us to explore. And kind of from an interface standpoint, is I think it would be amazing to potentially get some integrations with various L2s or L2-based dApps. There's maybe some complexities that arise when you're having to bridge over to like an L2, when you're moving into that ecosystem. There's certainly like some gas costs if you're moving off of L1, but maybe the interface isn't a good place to abstract away some of those things and make maybe ShapeShift becomes the best way to interact with L2s of various types and then move value around and maybe visualize where that value is, because nobody is really doing this right now. I mean, in the EVM space, you can use MetaMask to interact with Polygon or Phantom or all these other, Binance Smart Chain, but it's clunky in the sense that, you just have to choose which network you're using. You can't really easily visualize things. So when you think about the big picture of L2s and then the bridges, it gets super cool. So definitely a priority, I think, for Q1 to dig into that side of things. John just posted a great link too in the chat. If you want to see kind of, really how much has the DAO tapped into in terms of its own funding, that's updated in real time. SableLayer is just this amazing, cool tool to see that. So I'm getting a little bit hoarse here. I think I might wind things down. But if anybody else wants to jump up on stage and chat, I'll leave it open here. Or get some lo-fi beats back up in here. Or maybe somebody wants to sing karaoke. I'm not sure. But thank you guys for listening. Tons going on. And as always, your insights and questions are appreciated. So have a great evening, everyone. Thank you.